This is the new Volatility Master. This is an extraordinary software. Let's go through the reasons. Alrighty, let's go through all the reasons why this software stands out from the crowd. What makes it exceptional? It's got a lot of trade management features. It's got the ability to completely control the risk. It trades with the trend. It can identify market structure. Here's a big one coming up. It has the ability to stack trades without increasing the risk. I'll think of a couple more as we go through, but I'm going to start by showing you the settings. I'm not going to go through all the settings, but the settings I'm going to show you are how we can manage the risk. Okay, so you can, you don't want a software where, you might wake up one morning and find out that it's taken a big loss. The idea of software is to have a bit of trust and some stress-free trading, stress-free profit. But so we can set a risk percentage. What's that? That's going to set the maximum potential loss you could take from any individual trade, which we have set at 1%. This is a $100,000 account that I'm going to show this working on. Up here, we have daily equity protection set at $2,000, which is 2%. So each trade would have a maximum potential loss of 1%. Quite often it will be less than that, but you would never lose more than 2% in an entire day. We also have a daily profit target set at $8,000 or 8%. So on a daily basis, we have a potential loss of $2,000, but a potential profit of $8,000. So right there, we have a 1-to-4 risk to reward ratio between the potential loss and the potential profit. Now let's look at each individual trade. The maximum stop loss, so the stop loss will often be set less than this, but the maximum distance it will go is 10,000 points. That sounds like a lot. That's because we're going to be looking at the US 30 indice. You can use the software on pretty much anything, but we're looking at it on the US 30 here today. So the maximum distance the stop loss will be 10,000 points. But the take profit is set at 40,000 points. So right there, we also have a 1-to-4 risk to reward ratio. Right, so let's get on to having a look at this actually working. And I'll explain. All right, well, let's have a look and we'll go through all the features that makes this software stand out from all the other EAs that are out there. What makes this software extraordinary. Just quickly, one, you can completely manage the potential risk. Two, it'll trade with the trend based off its calculations of market structure and looking for breakout. It will actually place the stop loss based off market structure. It has a lot of trade management features, and this is my favorite. It has the ability to stack trades, add extra trades without ever increasing risk. I'll have to show you it working to explain that in full detail. But let's just quickly have a look at a couple of the settings. We're not going to go through all the settings today, but just to explain how you can completely control potential loss or risk. So we can set, based off a risk percentage and the order size, we have it set at 1% here, which means that the maximum potential loss on any individual trade would be 1% of the account balance. Quite often it would be less than that, but that's the maximum. Up here we have a daily equity protection. We have it set at $2,000. And because this is a $100,000 account we're going to be looking at here today, that's 2%. The daily profit target setting. So that's setting a target for the software to make for the day. We have that set at $8,000. So 8%. So if we look at this on a daily basis, the maximum potential loss is $2,000, but the maximum potential profit is $8,000. So right there, we have a 1-to-4 risk to reward ratio from the potential loss to the potential profit. If we look at the individual trades, we have a max stop loss setting, which is 10,000 points. If that sounds like a lot, that's simply because we're going to be looking at the US 30 indice here today. We can use the software on pretty much anything, but we're looking at US 30 today. Now, this setting sets the maximum stop loss distance. Quite often it will be set less than this, but that's the maximum. And we have a take profit set at 4,000. Oh, sorry, 40,000. So right there, we have another 1-to-4 risk to reward ratio. Now, if the stop loss is less than that, which it quite often will be, that'll make the risk to reward ratio even larger. But anyway, that's enough on the settings for now. Let's have a quick look at it working on the chart. Alrighty, here we have it working on a chart. And let me just go through a few features. It's showing us the risk that we're assuming per trade. The lines and the arrows, they're the software identifying market structure. So it's identifying the high points and the low points, identifying the trends on the different timeframes. Down the bottom left, it's identifying the average daily range of the last 20 days, the highest daily range, and how far the market's moved today. That doesn't actually play a part in this particular software's calculations, but it is handy information for the trader to have access to easily. Right here, it says target is $8,000. That is because we have set the daily profit target at $8,000. Once the software takes out a trade, you'll be able to see this figure varying. And as the trade goes into profit, this figure will count down lower and lower. Once it reaches zero, that will mean that we've made $8,000 and the software will close all open trades and stop trading for the day because we've hit our target. And it'll actually come up here saying target hit. Okay, let's just keep it running until it takes out a trade. Alrighty, there's our first trade. And down here, it's got the stop loss. Why did it place the stop loss here? It did that because the software had identified the low points. So it's identified market structure. That may be what you would want to call support. And it's placed a stop loss below it. That's just simply where a stop loss belongs. Now, that's important because the vast majority of softwares out there will not do that. They will not identify market structure. They will not place stop losses based off market structure. Some softwares don't place a stop loss at all. The majority of those that do will just set it at a static distance away from the trade with nothing really to do with market structure itself. Any decent manual trader, that's where they will place their stop loss. It's as simple as that. So that's important because that feature itself really makes the software stand out. I don't mind telling you the calculations, the coding that went into identifying market structure properly was a bit of a learning curve. But that's a big thing as far as something to do with EAs goes. Let's watch it go a bit further. Okay, the market retraced down here and almost hit our stop loss and then went back up. key point is almost hit our stop loss. It almost hit it because it's in the right spot. Simple as that. If the market had gone down further and we had to hit it, that is also good, because if the market went any lower than that, it would be indicating that the market's going to start going down, which means we don't want to have any buy orders open anyway. So get rid of them and look for a new entry point. But it didn't, and now the market's going up. Well, we'll just watch it work, and as it does something significant, I'll pause it and explain what's going on. And there we go. Our stop loss that was just below the blue line has now been moved up to here. And that's what we call a profit lock. It's moved the stop loss up into a positive position. It's above the entry point. So now if the market hits the stop loss, we're still going to make profit. So this is what we would call a trade that is now completely risk-free. And that brings us on to my absolute favorite part of this software. And that is its ability to stack trades, add extra trades without increasing risk. Let me try and explain that. When it took out this trade, we had potentially a 1% risk. We could have lost 1% of our account balance if the market had gone against us. Now, at this moment, we don't have any risk because this is a risk-free trade. Because that's now a risk-free trade, the software will look to, look for an ideal situation to place another buy order, meaning it's stacked a second trade in place. But it's only going to do that now that the first trade is risk-free. So it's going to look for the market to break above market structure, which it just did. Two things to tell you about what just happened. Okay, it broke above this previous high point. So that was an indication that the market trend is going to continue up. And because that first trade was risk-free, it's placed another trade. But it didn't just, so when the market got to here, that was the indication that the market was going to continue up. But it didn't just place a trade there. It placed a limit order, a buy limit order, back down here. And then when the market retraced, it activated it. And now we have that second trade in place. Why? Why did it do that? In the settings, you have the option to use limit orders or just normal orders. But the reason for doing this is that by using a limit order, we now have a better position. So, the lower the trade is in a buy position, the better it is. So you're much better off having a buy order here than up here. The stop loss is always going to be placed just below market structure. So the distance between the limit order and the stop loss is shorter than the distance would have been from if the trade had been up here. So that means we've got a better position. We've got a tighter stop loss, which means we have potentially a bigger profit. So some of the trade management features I talked about was the profit locks, where it moves the stop loss into a positive position. It also has a trailing stop loss feature. So once it gets into a bit more profit, we'll see this stop loss start to move up further. That'll be the trailing stop loss. There we go. So we can see that moving up. That's the trailing stop loss feature kicking in. This dotted blue line going up to this arrow, that's another trade management feature. That's one of the the partial close features. So it originally took out a 1.0 lot size trade. And if you can read where I'm hovering, it's just closed out a 0.1 lot size trade, which means the trade that we have open now is only 0.9 instead of 1.0. So it's closed a portion of it out. And the reason for that is simply to, close out, realize some profit while that trade's in in big profit, just in case the market retraces. At least then you've closed out some while it was in good profit. And the second trade's stop loss has also moved up now. So both trades are now risk-free. All right, so now we have 2 trades and 0 risk. Because both trades are now risk-free, the software is free to start looking for a good position to enter another trade. But it'll be looking to place another buy order. Every time you see those dotted blue lines, that's just a partial close going. Oh, there we go. So we now have the third trade in play. And this is something I want to explain correctly so that you understand why this is my favorite feature. We now have 3 trades open. So obviously, compared to only having our original 1 trade open, that gives us 3 times the potential profit. Okay, because we have 3 times as much trade open. So we now have 3 times the potential to make profit. But we've never ever gone above a 1% risk. So we now have 3 trades, but at no stage did we ever have more than 1% at risk. Now, this last trade that's just open, if the market went against us and we hit our stop loss, that trade could take potentially up to a 1% risk, probably less, but maximum would be a 1% loss. But the other 2 trades themselves are actually in more than 1% profit. The stop losses are in more than 1% profit. So even right now, even though we now have 3 trades and potentially 3 times as much potential profit, even if the market goes against us now, we're still going to end up ahead of when we started. If I just have a quick look on the graph here, this blue line is closed trade profit. So, and this is just the 2 little partial closes that occurred, those 2 dotted blue lines. And so our account balance at the moment has increased by $320, so about 1/3%. But this green line is actually our equity, which is at about $3,000. So we've closed out $300 of profit, but our equity, the trades that are still open, are in about $3,000 profit. So what that means is if I closed all the trades open right now, I would make $3,000 or 3% profit. And to me, that's just huge. We've stacked 3 trades, but we've never increased our risk. Our maximum risk right from the start was 1%. When we placed a second trade, because the first trade was risk-free, our potential risk was still only 1%. And now we've stacked the third trade and sort of have a 1% risk, but we really don't have any risk because the other 2 trades are going to make profit. And if we keep an eye on our target counter that's counting down from 8,000, we'll see when we're, at the moment it's between 4,000 and 5,000, meaning we're in $3,000 to $4,000 of floating profit. Now, and this is a setting you can change as well, the maximum number of trades you can have open. But when we're talking about indices, you're always talking about fairly low leverage. So you won't be able to put in too many trades anyway, usually only 3 or 4 before you sort of max out your margin. But on Forex pairs, you could, if you had a high leverage account, you could stack a lot of trades. But I rarely find there's any need to stack more than 3, because if you get a trend that goes up high enough that allows you to stack 3 trades like we have right now, then the market doesn't have to move much further before you've made enough money, before you hit your profit target. going down to 3,500. So now all three trades are completely risk-free. This is the new Volatility Master. This is an extraordinary software. No, they're not. Let's go through the reasons. Sorry, I got ahead of myself. They're not all risk-free yet, but hey, we've got three trades that are risk-free. Here we go. Look, here's something to explain. So we have 1, 2, 3 trades that are completely risk-free. And just here, it took out a buy limit order, but the market didn't retrace. It didn't retrace, so it didn't activate that buy limit. So it's still a buy limit, not an actual order. So that's the one drawdown of using the limit orders, is that sometimes the market doesn't retrace, so you miss out on the trade altogether. But we did get the first three, so I wouldn't be complaining. And as the market moves up, we're getting the odd partial close kicking in, and we're getting very close to hitting our profit target now. And our target's hit. That means that we've made our 8% for the day. And because it come up saying target hit, it's not going to do any more trading today, because it's hit its target. It's happy. All right, so that's about it, guys. But if you combine all those features we just talked about, you would be really hard pressed to find another software that has, any of those features, let alone all of those features combined into one. All righty. Thanks for watching. I'll leave it to you. So we just made 8% profit without ever risking more than 1%.